What's up YouTube, Dougie Chong here. Welcome to today's episode where I'll be reviewing GameStop stock. For those of you that don't know, a Reddit group known as Wall Street Bets pushed the stock about 100 times in just the past few months. In this video, I'll do what I always do, look at the fundamentals of the stock and the business in general, even though most of the people buying the stock probably aren't looking at any of these metrics. And then I'll go over one situation where you might want to buy this stock. Alright, so GameStop. They are a video game retailer in the US, I think similar to something like EB Games here in Canada, and obviously things did not work out so well for EB Games. I think they are bankrupt, or I don't really see very many stores anymore. I came across GameStop stock as a potential investment idea maybe mid last year when I saw that infamous hedge fund manager known as Michael Burry was interested in this stock. For those of you that don't know, Michael Burry was famous for calling the great housing collapse. He shorted the whole housing market back in 2008, made a whole lot of money. He doesn't even really need to keep working now, but I guess even with this latest GameStop position, if he held on till now, he's probably made quite a lot of money. This was back when the company was a mere $4, and even back then I did not have a lot of faith in that company. I did not see the path forward, even though at $4 it was admittedly a little bit undervalued. Everything is going online now. There is no need for these brick and mortar stores, especially for something like video games. Although something like the PS5 coming out is sure to help profits. I believe they also sell Pokemon cards, which is very profitable right now. Alright, now let's look at some of the company's financial that might help justify its $13.5 billion market capitalization. Looking at the balance sheet, they have about $2.8 billion in assets and only $2.2 billion in debt. So from a balance sheet perspective, they do not seem all that bad. But here I'll show where the problems lie, and it starts with the revenues that used to be $8.5 billion in 2018 down to $6.4 billion in 2020. Where typically you want to see growth, declines are the last thing you want to see. And it's not like it was just a sharp decline due to the whole pandemic situation. They were on a steady decline since 2018. And the net income is really where this company is hurting. They went from a positive $35 million to negative $471 million in the past 3 years. A lot of the bulls think the company will be able to transfer to have a more online presence when they hired former Chewy CEO Ryan Cohen. Whether or not he lives up to those lofty expectations, no one knows for sure. We will just have to wait and see. I'll also explain the concept of a short squeeze right now and how it really helped to prepare the stock straight upwards. So the company GameStop loses about $500 million a year. They've been on a steady decline for the past few years. They seem like a no-brainer stock to short from an analytical perspective. Shorting is typically done by big institutions, although any investor really can just short. They just have to say they have a few years experience in the stock market. Basically, they borrow some shares from, I don't know, anywhere else, and then they hope that the stock goes down. They can buy back the shares at that lower price and return it, and then they make the difference. But as the price went the opposite direction, it pretty much went straight up when a group of people from this Wall Street Bets group just started buying up the stock like mad, not looking at any of the fundamentals. It forced a lot of these big firms to cover the position, buy the shares at a higher price, and take a loss. But as the stock goes higher and higher, it causes even more shorts to cover their position and pushes the stock higher and higher in an endless cycle. This happened with Tesla stock before, and it's happening with GameStop here today. Now let's look at the price action of GameStop stock. It obviously has no PE ratio because it has negative earnings. You're paying $13.5 billion for a company with negative earnings. All we really need to look at is the 6-month chart, where you see it was a mere $4 6 months ago. Hindsight is 2020, and of course it was undervalued back then, but by how much exactly? It has reached over $400 recently, which is a 100 times rally. Pretty much the craziest thing I have ever seen in my lifetime looking at stocks that's over 10 years of experience. Even if we look at just the past 5 days, goes from about $40 to about $400, but now it's kind of back around $200 today, even though I think after hours it's going up again. So of course, as the title of this video states, GameStop is not a buy in my opinion. Again, this is just my opinion, this is not legal financial advice. But purely from looking at the fundamentals, as well as seeing how fast it went up just recently, I really can't justify buying this stock. I did come up with the idea for this video back when it was around $400, so getting in around $270 is certainly better than $400. But be prepared for this stock to go right back down to $40. I don't think it'll quite go back down to that $4 level, but you never know. That being said, this stock is definitely a gamble. A lot of people are calling for this stock to hit $1,000, and it very well could. So if you were thinking of blowing $1,000 on lottery tickets or something, because you can't really go to casinos right now, I think it's a better idea to put it on GameStop. At least there's a chance it'll go up. It's a higher probability gamble. But maybe that's where all this money is coming from. A lot of gamblers can't gamble anymore, so they're just playing the stock markets. Alright, so the one reason I could possibly justify buying this stock is not really to make money, but more for the principle of buying GameStop stock. It is very much small retail investors against these giant billion-dollar hedge funds that are shorting GameStop versus the retail investors which are buying it up. It's usually the big hedge funds that have the advantage, which makes this particular battle very intriguing. It's like if you have billions of dollars, usually you can move markets a lot better than a few retail investors. To top things off, Robinhood and a few other brokerages halted the trading, or at least the buying, of certain stocks completely. Stocks such as AMC, GameStop, and BlackBerry. You were just not allowed to buy it on Robinhood at all. That is absolutely crazy, and while it is definitely legal, it no doubt had a huge part in manipulating the market and driving the price straight down. What an absolutely exciting past few days the market has been. Everything else non-Wall Street bets has been pretty flat and unexciting. So this is at least a little bit of excitement into the stock market. So I'll say if you want to support small retail investors, maybe pick up a few shares of AMC. It's more in that earlier stage. It's not gone up 100 times quite yet. I myself bought a few shares just for fun. It's more of a gamble. It's not really an investment. That's it for this video, guys. Thanks a lot for watching. Leave a like if this video helped you at all. Don't forget to subscribe if you have not already. Enjoy the rest of your day and see you in the next video.